Hey everyone, and welcome back to Safe Simple Sound Tax Edition. I'm your host Alex, and I'm thrilled to have you join me today as we tackle a topic that's crucial for every working American, and frankly, anyone receiving income: tax withholding. At Safe Simple Sound, we believe in seizing financial control, and a huge part of that is understanding where your money goes. Remember our core belief: embrace mastery of cash flow. Well, today's episode is all about mastering a significant part of that cash flow, the money that's withheld from your paycheck for federal income taxes. Today's deep dive is based on a comprehensive guide titled Understanding Tax Withholding, published directly by the IRS. This IRS Publication 17 really breaks down the pay-as-you-go system we have here in the US and how to make sure you're paying the right amount of tax throughout the year. Not too much, and definitely not too little. This is going to be a practical, actionable episode packed with information you can use immediately to take control of your taxes. We're all about keeping things safe, simple, and sound, and that definitely applies to understanding your federal income tax withholding. So grab a pen and paper, maybe even pull up your latest pay stub, and let's get started. Tax withholding. It might sound dry, but trust me, understanding this is key to avoiding unpleasant surprises come tax season and potentially even putting more money in your pocket throughout the year. First things first, let's talk about the fundamental principle here. The U.S. operates on what's called a pay-as-you-go tax system. Think of it like this. Instead of paying for a huge grocery haul all at once at the end of the month, you're paying for each item as you put it in your cart. The government wants its share of your income throughout the year, not just in one big lump sum in April. Why do they do this? Well, imagine the chaos if everyone had to come up with thousands of dollars all at once. It would be a nightmare for individuals and for the government's cash flow. The pay-as-you-go system, while sometimes feeling like a constant drip, actually helps ensure a steady stream of revenue for government operations, funding everything from roads and schools to national defense. It helps them, and it is supposed to help us budget better, at least in theory. So, what is tax withholding specifically? It's simply the money your employer takes out of your paycheck and sends directly to the IRS on your behalf. It's like they're your designated tax payment buddy, making sure you're staying on track with your tax obligations. If you've ever looked at your pay stub and seen a deduction for federal income tax, that's your withholding in action. It's a prepayment, essentially, towards your total annual tax bill. Now, you might be thinking, okay, that makes sense for my salary, but tax withholding isn't just for wages. It can also apply to other types of income. Think about pensions, bonuses, commissions, even gambling winnings. Yes, if you hit it big at the casino, Uncle Sam wants his share, and it's often withheld directly from your payout. The same goes for things like unemployment compensation. The idea is to cover as many income sources as possible under this pay-as-you-go. And here's why understanding this is so crucial: avoiding underpayment penalties. Imagine you get to the end of the year, file your tax return, and bam, you owe a huge chunk of money because you didn't have enough withheld throughout the year. The IRS can, and often will, charge penalties for that. It's like getting a late fee on a bill, only potentially much more expensive. Think of withholding as a balancing act. You want to have enough taken out to cover your tax liability, but not so much that you're giving the government an interest-free loan all year. That extra money could be in your pocket, earning interest, or helping you pay down debt. How does understanding tax withholding empower you as a taxpayer? Well, it gives you control. It allows you to proactively manage your tax situation rather than being reactive and potentially facing unpleasant surprises. It helps you make informed decisions about your finances and ensure you are on the same page as the IRS. It can be one less thing to worry about. So to recap, the U.S. tax system is pay-as-you-go, meaning you pay taxes throughout the year. Tax withholding is the mechanism for this, where your employer or other payers deduct money from your income and send it to the IRS. This applies to various income types, not just wages. And finally, getting your withholding right is essential to avoid underpayment penalties. For our call to action today, I want you to do something simple but powerful. Grab your most recent paycheck. Find the section that details your deductions and locate the line showing your federal income tax withholding. Just take a look at that number. Get familiar with it. This is the starting point for understanding your specific tax situation. Now, we're going to dive deep into one of the most important forms you'll encounter as an employee. Form W-4, the Employee's Withholding Certificate. Don't let the name intimidate you. We're going to break it down step by step and show you how it's your key to accurate tax withholding. Think of your Form W-4 as the steering wheel of your tax situation. It's the primary tool, the main document, that directly controls how much federal income tax withholding comes out of your paycheck each pay period. It tells your employer how much to send to the IRS on your behalf. Get it right, and you're cruising smoothly. Get it wrong, and you might end up owing a big chunk of money at tax time, or conversely, giving the government an interest-free loan all year. Neither of those scenarios is ideal, right? So, what exactly is on this magical Form W-4? Let's walk through the key sections. First, there's the personal information section. Pretty straightforward. Your name, address, social security number, and filing status. Single, married, filing jointly, etc. This tells your employer who you are and your basic tax situation. Next, we have the multiple jobs/spouse works section. This is super important if you have more than one job, or if you're married and both you and your spouse work. Imagine two streams flowing into a single river, your combined income. If you don't account for both things on the W-4, you might not have enough tax withholding and you could end up owing money. The form provides a worksheet, or you can also use the online IRS tax withholding estimator to help you figure this out accurately. It is all about getting this federal income tax withholding correct. Then comes claiming dependents. This section allows you to reduce your tax withholding based on the number of qualifying children or other dependents you have. Think of it like this. The government recognizes that raising a family costs money, and they adjust your tax burden accordingly. Each dependent essentially lowers your taxable income, meaning less is withheld. Finally, there's a section for other adjustments. This is your catch-all for anything else that might significantly impact your taxes. Maybe you have a lot of itemized deductions or income from sources other than your job that isn't subject to withholding. This section lets you fine-tune your Form W-4 to reflect your complete financial picture. The information you provide on this W-4 form in these sections directly impacts the dollar amount withheld from each paycheck. It's a cause and effect relationship. More allowances generally mean less withholding. Fewer allowances mean more withholding. It's a balancing act to get it just right. And here's a crucial point. Life changes. You get married, have a baby, get a new job, or maybe your spouse's income changes significantly. Any of these events should trigger a review and, most likely, an update of your Form W-4. Don't just file it away and forget about it. Think of it like adjusting the thermostat in your house. You wouldn't keep it at the same setting all year round, would you? Your financial life needs similar adjustments. Now, there's also an option on the Form W-4 to claim exempt from withholding. This means no federal income tax will be withheld from your paycheck. But, and this is a big but, you can only claim exempt if you meet very specific requirements. Basically, you had no tax liability last year, and you expect to have no tax liability this year. If you claim exempt when you don't qualify, you could face penalties. So be absolutely sure you meet the criteria before checking that box. It is best to be safe with this federal income tax withholding. So why is all this so important? Well, filling out your Form W-4 incorrectly can have real consequences. Underwithhold, and you might owe a hefty sum, plus potential penalties when you file your taxes. Overwithhold, and you're essentially giving the government a free loan of your hard-earned money. You could be using that money to pay down debt, invest, or simply enjoy life. Take a moment to think about your own situation. Have you experienced any major life changes recently? When was the last time you actually looked at your Form W-4? Okay, here's your mission, should you choose to accept it. Go to irs.gov, that's irs.gov, and download a copy of Form W-4. Just familiarize yourself with the sections, even if you don't need to make any changes right now. Understanding this form is a huge step towards taking control of your finances and ensuring you're on the right track. To summarize, the Form W-4, or Employees Withholding Certificate, is your direct line to controlling your federal income tax withholding. The key steps are personal information, multiple jobs spouse works, claiming dependents, and other adjustments. Remember to update it whenever your life circumstances change. And of course, be very careful if you're considering claiming exempt. Your call to action: download Form W-4 from irs.gov and read it. Think of it this way. Your W-4 is like setting the autopilot on your regular income's tax payments. But what happens when you have other flights coming in, side hustles, retirement income, or even unemployment benefits? We need to make sure those are accounted for too, to avoid a bumpy landing come tax time. So, let's briefly review some of those other income streams that are also subject to withholding. We're talking about things like pensions, annuities, sick pay, if your employer is part of the plan, unemployment compensation, and even certain federal payments. It's not just your regular salary that the IRS is interested in, unfortunately. Now, for these specific situations, you won't be using the standard W-4. Instead, you'll encounter its cousins: Form W-4P for periodic pension or annuity payments, Form W-4S for requesting withholding from sick pay, and Form W-4V for voluntary withholding requests on things like unemployment. Think of them as specialized versions of the W-4, tailored to these different income types. The big thing to keep in mind here is the concept of underwithholding. This is basically the tax equivalent of flying below the radar. You're not paying enough tax throughout the year. And just like flying too low, it can lead to some serious consequences, namely underpayment penalties. The IRS, understandably, wants its money on a regular basis, not just in April. Imagine you're baking a cake. You wouldn't just dump all the ingredients in at the end, right? You add them gradually, mixing and adjusting as you go. Paying your taxes is similar. You need to sprinkle those payments throughout the year to avoid a big, unpleasant surprise at the end. Now, for some income, like earnings from self-employment, withholding isn't typically an option. This is primarily an issue for those who work for themselves, the freelancers, the consultants, the small business owners. For them, there's something called estimated tax payments. These are quarterly payments you make directly to the IRS to cover your tax liability. While we won't dive deep into estimated taxes today, that's a whole other podcast episode. It's important to be aware of them, especially if you're venturing into the world of self-employment or have significant income not subject to withholding. So, how do you figure all this out? How do you know if you're withholding enough or if you need to be making estimated tax payments? Thankfully, the IRS provides a fantastic tool, the Tax Withholding Estimator. You can find it at irs.gov/W4 app. It's like having a personal tax GPS guiding you to the right withholding amount. I highly recommend using this tool. It asks you questions about your income, deductions, and credits, and then gives you a personalized recommendation. And for even more detailed guidance, check out Publication 505, Tax Withholding and Estimated Tax, also on the IRS website. Let's consider a few scenarios. Imagine Sarah, who works a full-time job and also receives a small pension from a previous employer. She needs to use both Form W-4 for her job and Form W-4P for her pension to ensure she's withholding enough across both income streams. Or think about Mark, who recently started freelancing in addition to his part-time job. He'll likely need to make estimated tax payments for his freelance income to avoid penalties. If you have multiple income streams, ask yourself, am I paying enough tax throughout the year? And, more broadly, why is it essential to proactively manage my withholding and estimated taxes rather than waiting until the tax filing deadline? The answer, my friends, is peace of mind. Nobody wants a nasty surprise from the IRS. Proactive management means you're in control, you're prepared, and you're less likely to face penalties. So, here's your key takeaway. Don't let other income fly under the radar. Understand the different forms, be aware of underwithholding, and use the IRS resources available to you. And your call to action for today? It's simple but crucial. Head over to irs.gov/W4 app and use the Tax Withholding Estimator to check if your current withholding is accurate for your situation. It takes just a few minutes, and it could save you a lot of headaches down the road. And that wraps up our deep dive into estimated tax payments. Hopefully, you're feeling a bit more confident about navigating that aspect of your finances. Now we're going to shift gears slightly and talk about something called backup withholding. It sounds a little intimidating, I know, but trust me, it's a concept you'll want to understand, especially if you've ever dealt with, say, forgotten dividend payments or had a little mix up with your tax ID number. So, what exactly is backup withholding, and why should you care? In a nutshell, it's a safety net for the IRS, ensuring they receive taxes on certain types of income when there's a risk those taxes might not be reported correctly. We're going to cover a few key situations where it might come into play, how to avoid it, and what to do if you think it's been applied to you incorrectly. First up, let's define backup withholding. Imagine you earn interest on a savings account or receive dividends from investments. Normally, the payer, like the bank or investment company, doesn't automatically withhold taxes on these payments. They rely on you to report that income on your tax return. But if the IRS has reason to believe you might not report it, maybe you forgot in the past or there's a problem with your taxpayer information, they can instruct the payer to withhold a flat percentage, currently 24% of those payments. That's backup withholding in action. It's like a preemptive tax collection to make sure the government gets its due. The most common reason for backup withholding? An incorrect or missing taxpayer identification number, TIN. This is usually your Social Security number, SSN, but it could also be an employer identification number, EIN, if you're a business. Think of your TIN as your financial fingerprint for the IRS. If the bank or company paying you doesn't have the correct fingerprint on file, they're required to start backup withholding. It's like trying to unlock your phone with the wrong code. The system locks you out until you provide the correct information. This is why it's crucially important to double, triple, even quadruple check that your TIN is accurate on all your financial accounts and documents. A simple typo can trigger this whole process. Another situation that can lead to backup withholding is if you've previously failed to report interest or dividends on your tax return. The IRS keeps track of these things. If you've consistently underreported this type of income, they might flag your account and require backup withholding on future payments. It's a bit like getting a warning from a referee. You're being put on notice to play by the rules. Now, let's tie this back to something we discussed earlier, Form W-4. While Form W-4 is primarily for your employer to withhold taxes from your wages, the accuracy of the information you provide there is still paramount. Your name, address, and especially your Social Security number must be perfectly accurate. A mistake on your W-4 won't directly cause backup withholding on your wages, but it can create inconsistencies in your IRS records, which could potentially lead to problems down the line. Think of it as maintaining a consistent identity across all your financial interactions. So, what should you do if you suddenly notice that backup withholding is being applied to your income and you believe it's a mistake? First, don't panic. Contact the payer, the bank, investment firm, or whoever is making the payments immediately. They can usually tell you why the withholding is happening. If it's due to an incorrect TIN, you'll need to provide them with the correct information, often by completing a new Form W-9, request for taxpayer identification number and certification. If it's due to underreporting on a previous tax return, you'll likely need to work with the IRS directly to resolve the issue, possibly by filing an amended return. Why is it important to make sure that your TIN is correctly reported? Because, put simply, you want to avoid all of the hassle and potential issues that we've just talked about. What should you do if you believe backup withholding has been incorrectly applied to your income? Contact the entity withholding immediately. You may need to provide corrected documentation, such as Form W-9. To recap, backup withholding is a mechanism the IRS uses to ensure taxes are collected on certain types of income when there's a risk of underreporting. The most common causes are an incorrect TIN or a history of failing to report interest and dividends. Keeping your TIN accurate and reporting all your income is the best way to avoid it. My call to action for you today is simple. Take a few minutes to review your important financial documents. Make sure your taxpayer identification number is correct everywhere it appears. And if you have any doubts or concerns about backup withholding, head over to the IRS website. It's a treasure trove of information, or consult a tax advisor. They can provide personalized guidance based on your specific situation. And that's a wrap on our deep dive into the world of tax withholding. We've covered a lot of ground today, from understanding the basics of the pay as you go system to mastering the all important IRS Form W-4, and even touching on those special situations like backup withholding. Remember, the key takeaway here is that you have control. By understanding how federal income tax withholding works, and by accurately completing your Form W-4, you can ensure you're paying the right amount of tax throughout the year. This helps you avoid those unpleasant surprises, like underpayment penalties, come tax time. And it is important to stay on top of it so that you don't give the IRS an interest-free loan with your money. I think one of the most impactful things we discussed today was the importance of updating your W-4 form whenever you experience a major life change, a new job, marriage, a new baby, and so on. Those changes can significantly impact your tax liability, and your withholding needs to reflect that. I also think it's helpful to know about things such as Form W-4P for our listeners with pension income. Thank you so much for tuning in to Safe Simple Sound. I truly appreciate you spending your time with me, and I hope you found this episode helpful and empowering. Embrace mastery of your cash flow. Don't forget to visit our show notes for links to the IRS resources we discussed, including the Tax Withholding Estimator and Publication 505. And if you found this episode valuable, please consider leaving us a review, sharing it with a friend, or subscribing to the podcast. It really helps us reach more people who can benefit from this information. Seize financial control by staying informed. Next time on Safe Simple Sound, we'll be tackling the often confusing world of estimated taxes. We'll break it down in our signature safe, simple, and sound way. Until then, stay informed, stay empowered, and keep making sound financial choices. This is Alex, signing off.